CNBC TV18 Newsbreak confirmed VIP promoters sell up to 32% stake to a consortium of Multiples PE and Mithun Sacheti at 388 rupees per share, a discount to the current market price. A consortium will also make an open offer to acquire an additional 26% stake. The stock traded lower and now has recovered.
Divi's Laboratories under pressure on fears of competition as Novartis loses its bid to block MSN Pharma from launching a generic of its cardiac drug Entresto. Divi's is a key supplier of APIs for Entresto, and the drug contributes 25% of its EBITDA as per IIFL.
Avenue Supermarts trades lower, though off lows on the back of its earnings. The company's profit remains flat while the margins take a hit on higher competitive intensity.
Castrol shares trade higher as it receives a favourable order from the Tax Appellate Tribunal in a 4,130 crore rupee dispute with Maharashtra Sales Department.
It's a tepid listing for Travel Food Services. The stock lists at a 2% premium to its issue price and thereafter sees a bit of selling. The management will join us shortly to discuss their post-issue strategy.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC TV18 Motilal Oswal studio. Well, the Nifty is down closer around 50 points or thereabouts, but the good news is we have seen a big recovery in the mid-cap index. Number of stops advancing. Well, when we started off, we're only around 700 or thereabouts. So the crisscross lines will tell you the story. The breadth of the market has improved. The Nifty Bank has moved into the green. So not as bad as what was feared in the initial trading minutes.
Nigel, you know the kind of selling that we saw on Friday with all-round selling from the FIs in cash market, index futures, stock futures, etc. At some point, the street thought maybe it may have been overdone. So there is a bounce that takes place. The question is whether the Nifty goes ahead and crosses past the 20-day moving average of 25,265 thereabouts or not. That's something we'll be watching out for. And what the Nifty Bank does from here on as well. On Friday's trading session, it did not fall as much as the other indices and was supported. So the Nifty Bank holding mildly in the green. The broader market's doing a lot better. And a lot of individual stocks actually which open lower are seeing a fair amount of recovery. And amidst all of that, there are a bunch of stocks which are surging right now as we speak. Vodafone Idea for one, up nearly 7%. We're seeing a big gain in names like J. Kumar Infra, something like a Shoppers Stop, or even HEG, which has seen a big spike in the last few minutes or so. But speaking about spikes and, individual listed stocks, let's get action from the primary market. We have a new kid on the block. Travel Food Services made its debut on the bourses today. The stock listed at a 2% premium to its issue price. And thereafter, we saw a bit of a sell-off just in line when the market, we're currently seeing almost a 2% decline on that stock from its issue price of 1,100. To discuss the company's outlook, we're joined by Varun Kapoor, who's the CEO and Managing Director of Travel Food Services. Varun, thank you so much for joining in. Momentous day. Congratulations on the listing. Now, the question is, the last time you joined us, you said your revenue momentum will continue, your margin momentum will continue from here on because the travel in India continues. What we want to understand is how many new airports have you signed up with? And over the next few years, what are the kind of airports that are coming in terms of supply for you?
Right. No, thank you for having me on the show. It's a pleasure to be here on this day for us, tremendous day for the business. Getting listed on the stock exchanges. And last time I think you were kind enough to have me on your show and we spoke about the business, and I think what has been truly tremendous over the last few years, I think the aviation story, right? We operate in aviation, F&B outlets and lounges as well. And the last few years have been tremendous growth. I think going forward, no doubt the same tailwinds which have been there in the business continue to be there. So talking about, we have outlets continuously opening at new airports coming in. We spoke about opportunities. We are opening shortly at the new Noida airport coming up. Navi Mumbai is opening up soon. We're opening there as well units. So there's a big amount of opportunities, no doubt, as new airports come, but also in existing airports where we run currently. We recently opened stores in Delhi airport as well. So you constantly have new outlets coming up across the country as new airports open, but in existing airports as well.
Let's get very specific. There is a Navi Mumbai airport which is coming in, and then there is one at Jewar which is coming in the north as well. Have you signed agreements with them already?
That's right. We've done agreements there. We have units opening up shortly, both expected, as you know, in the next few months, these to come live. So you'll see our units there, some of our in-house concepts, but you'll see some interesting, both leading international concepts and some of the strong national brands as well. So quite holistic outlets, as well as lounges as well in both of these airports.
Hi, Varun. Good morning and good to see you, Ben. Congratulations on listing. The journey has just begun with regard to being listed on the stock exchanges, and we look forward to having you more often. And quite a job in ringing that bell, going hammer and tongs at that one. And the younger generation as well were quite excited to be there. So all the best to you, the entire team, as well as the family. Well, that said, let's focus on growth.
So much.
You know, as you said, that you're quite confident about growth. Given the new airports that you have signed, business as well, momentum is expected to continue. So for the coming year, a mid 20% growth is doable, if you could confirm that. And margins as well should be in the vicinity of 30-35%, or would you like to look at the PAT margins, which should hover around the 20-22%? Tell us.
Right. So I think for our business, yes, no doubt you see structurally the tailwinds continue to be there. While we are shortly will be coming out with the results and talking a bit specifically about how those are trading and going on. But yes, I think the general trend in terms of our business growth, and if you see in terms of margins particularly, I think PAT may be a relevant one with our business. We've been about 20% PAT margins, thereabouts over the last 3 years, quite stable on that. So those levels we see to be quite stable for our business and continuing forward. So you will see that robust nature of, I think, aviation growth is very much palatable across, I think, Indian markets. And I think our business will be reflected of that, as you'd see, I think, in a few weeks when we come out with our results as well.
Given what you said to us earlier, and if that trend continues, then the street is factoring in close to 500 crores in terms of PAT for FY26. But we let your numbers speak about that once you can speak about those numbers once the first quarter numbers are out as well. You've historically done about 60 to 70 outlets in terms of openings every year over the last few years. Is that trend which is likely to continue? How many are you likely to open from the QSR space and how many lounges?
Right, so we're at currently about, in terms of our business, just to give you a reflection, we were at 380 outlets roughly, when we looked at our June numbers, on the travel QSR side, 380, 390 units then. What's happened, which at the time of listing, just to share with you, and we didn't get a chance to discuss these numbers, we've actually been at 442 travel QSR outlets as of March end. We've opened a few more actually over the last 2 or 3 months as well. We've had 37 lounges. This is up from 32 lounges which were there, which we had in June of last year in 24. So the business openings have been quite robust and strong. We've opened a few more stores in Delhi Airport, and including with Navi Mumbai and Noida Airport, when those come in, you'll see a significant jump up as well in the number of stores happening. So this is constantly happening in our business. As new terminals happen, new expansions happen, you'll constantly see over the next year as well that same momentum in terms of outlet openings as well.
Varun, a 500 crore net profit number looks gettable in FY26. Going by the projections, could that be the aspiration, 480 to 500 crores of net profit?
So I wouldn't comment. I think we're possibly we're not really giving exact guidance because I think just because we're so close to where our results will come in. But I think from a growth point of view, we've been historically, I think, over, if you see kind of the 20-25% growth rates have been there historically, and we did about 380 last year. So from that point of view, I think it's probably more helpful to look at those trends over the last 2 years, which has been approximately a bit more than a 20% PAT growth consistently. So I think one maybe refer to that without probably giving exact numbers for the year ahead. Just
mathematically you should be in the vicinity of 460 to 500 crores, but you don't want to comment on that. Hopefully next time around we'll get a concrete guidance. Final question from my end before Mangalam comes in again. There is this fear because of what happened with Dreamfolks, and the issue that the airport authorities will like to directly get into the space which you are currently dominating. What is your comment on that? Do you see it as a risk? Or do you see that as it is you're partnering with them, whether it's the Adanis, whether it's the GMR, company, so they're already getting their share of the pie. So you don't believe there's a risk to your business? Or, do you think that what happened to Dreamfolks could also happen to you all?
Right. So exactly as you say, we've got deep partnerships with airport operators. These are great things. You know, we look at them ultimately in operating in these airports, the vision they have, and executing that. Trust they have in us, and we actually take the real estate and build these units. We operate, we build these units. So maybe looking at the particular example of Dreamfolks, there. So we tie up, for example, our lounges there. We are actually the operators of the lounges. So we would go tie up, whether it's a Dreamfolks, we tie up with airlines directly, we tie up with banks. So we have multiple tie-ups, and therefore, when a middleman goes, like, recently at many of the Adani airports, there's quite a bit of technology coming in, the Adani Digital, for example, you leveraging that, getting a direct tie-up at those airports with, those
So Adani and GMR are not a risk to your business, right?
That's right. They're partners with us, correct. So
what
we
we
would be
understand,
the partners who ultimately are running the operators.
What we understand is that the Adanis may be talking to other players as well, the likes of Premium Plaza, etc., for some of their marquee hotels, or rather airports. So just wanted to understand, how long is your relationship with them? When do those contracts come up for renewal?
Right, so these contracts we have generally are long-term in nature. These tend to be 8 to 9 years on average there, and actually going longer these days. So many of our contracts actually are there for the long term. So when we're doing it actually in terms of where you see we actually operate in a joint venture with our airport partners, particularly talking about Adani and GMR, the examples you give. So actually our real estate is run together with them. This is the best practice of both coming together. You have a strong operator with us and airport knowledge in terms of them. So I think that coming together is where our business actually works. It works through a joint venture. With both investing.
Right. And a final question before we let you go, Varun. You've raised 2,000 crore rupees. The entire thing is an offer for sale from the promoters. Promoters still hold about 86% stake. So they'll have to bring it down to 75% over the next 3 years or so to meet the minimum public shareholding norms. So the other 11%, will that be an OFS as well? Because from the looks of it, you don't require cash. So just wanted to understand how that will go.
Right, no doubt. From a cash point of view, while the business doesn't need, we've got a little more than 600 crores of cash. We have no debt on the books. From that position, we're quite well capitalized for growth we're quite enough of cash for growth capital. But from a point of view, we've just done this journey. Our focus was getting this over the line. We've not had the chance to actually think in terms of that. We have a 3-year journey to get there and how we probably approach it. So that's where we are in terms of, obviously we'll have to get there from a 25%. And as promoters, we're committed to this business and have significant stakes still in the business to grow it.
All right, Varun, enjoy the day. We'll interact with you more often. As you say, you believe that the big names like Adani and GMR, they're partners. So you don't believe it's much of a risk to your business. Congratulations on the listing. And Mangalam and me, we look forward to chatting up with you in the coming quarters as well.
Thank you, Nigel. Thank you, Mangalam.
All right. Well, time to slip into a short break. But remember to tune in to our all-new CNBC TV 18 Prime. Bring you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV 18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV 18 Prime at 12 noon for the Global Reset, at 1 p.m. The Big C, and Global Lens at 8:30 p.m.
Welcome back. You're watching us here on Chartbusters. Let's get in Shivangi Sarda for a quick technical check on the market. Shivangi, on Friday we saw a big decline, but this morning it's not as bad as what the opening had indicated and what the fears were. We've seen some recovery from the lows. So do you think 25,000 as an important psychological level holds for the Nifty?
Very good morning, Mangalam and Angela. Thank you for having me. So we've seen that, of course, Nifty has slipped most part of the week, in the previous session, in the previous week. And we've seen that the put call ratio has also sunk and sustaining below 1, which is, indication that call writers have made their position. Of course, 25,000 will be an important make or break zone here, quite a psychological level here. If it breaks these levels, then we could see 24,800, but we're expecting some range bound move because there is some support base buying at 25k levels, which is making it a float at these levels. So we're looking at a range-bound lackluster movement for Nifty with the upside cap of around 24,400 marks, and a strategy-based play could be played out for this one. Now, talking about Bank Nifty, of course, we've seen that the smaller PSU names are still holding up, and which is why it is outperforming the broader market. And Bank Nifty, we are looking to sustain at these levels at a support of 56,250 and the upside towards 57,350 levels.
All right, and individual stocks, what do you have on your list?
So individual stocks first up on my radar is from the banking space, which is CanBank. We've seen that the PSU space specifically have been outperformers, and CanBank has given a consolidation breakout of the last 9 trading sessions, with RSI showing positive divergence here. Very good short covering move can be captured here, and we've seen that it is surpassing its previous hurdle zones, getting ready to hold above 115 levels. So this one is a buy at these levels, and the next target being 120 with a support of 111. And the second pick on my radar is PEL, which has been witnessing excellent short build-up. After a long consolidation, we've seen this one moving. From the last 2 trading sessions, the volumes have been quite significant, and the previous resistant levels of around about 1200 levels is acting as a support level here. So clear role reversal can be seen here. And we are recommending a buy here with a target of 1320 levels and a stop of 1250.
Got it. Okay. All right, Shivangi, thanks a lot for giving us those views. Well, let's focus on our special segment where we get you a few ideas for profit from Money Control Pro. Lekha Badlani of moneycontrol.com joins us to talk about a stock that she's tracking closely. Lekha?
Yes, so we're positive on SGS Enterprises, which is a prominent player in the decorative aesthetics products for the automotive industry. Now, SGS is poised for significant growth by focusing on new generation, value-added products and strategic expansion. With focusing on advanced high-margin products for the display market like that of optical plastics and cover glass. The company is also investing in in-mold labeling, in-mold decoration and in-molded electronic parts for the global markets as well as for the EV industry, all designed to boost the content per vehicle. Now, the management aims to increase the content per vehicle in four-wheelers to 10,000 rupees from the current 3,500 to 5,000 rupees. To drive this expansion, SGS is actively onboarding new clients like Dixon Technologies, Hero MotoCorp and Stellantis. They also maintain strong relationships with consumer durable clients like Whirlpool and Samsung. SGS is also prioritizing export market expansion, targeting 14 to 15% of the consolidated revenues by FY28, up from current 7.5%. To support these ambitions, SGS is undertaking significant capital investments with a capex of 150 crore in FY26 and around 220 crore in next 2 to 3 years, mostly funded by internal accruals. The company's management is confident in achieving double the industry growth and maintaining an EBITDA margin of around 26%. Now, given the strong business outlook, the current valuation of around 23 times FY27 estimated earnings appear reasonable for long-term investments.
All right, thanks a lot for that, Lekha. Time to slip into a quick break. We'll be back with more market action. Stay tuned. Welcome back. Well, a bit of a wibbly-wobbly market is what we're seeing. Ola is the one, I think, that's bounced up considerably from the lows. Remember, the stock has seen a sharp pullback from the highs that we saw, more than 140 rupees to around 40 rupees. But the reason is because they're saying that the auto business will be positive from Q2. They're also saying that the FY26 gross margins will be around 35 to 40% with PLI benefits. And the commentary basically on the whole volumes as well, pretty healthy. So for the time being, the street is buying into this bounce. Sustainability and delivering these numbers is going to be most important on that one.
They've given the revenue guidance for this year as well, 4,200 to 4,700 crore rupees, again, with the volume guidance. But it is definitely, the management has to go ahead and walk this stock that they've been speaking about operational profitability. With that, we'll wrap up on this edition of Chartbusters. Thank you so much for watching. The team of Trading Hour comes up next.